Well, good morning, everybody. Hope everybody's doing well. Maybe got a little nibbles or caffeine in the break to get your blood pumping, because there's a lot of information coming at you today, a lot of good information. My name is Art Johnson. I'm a director at Fannie Mae, and I'm also the resident bad joke teller. And I'm just saying that because if I accidentally say a cheesy pun or something, I don't want any groans in the audience, because I hear they're taping this, and I don't want this to come back and haunt me. So hopefully we have a deal. So let's go ahead and get started with the panel. So this is with the service providers. So when we kicked off this initiative many moons ago, we knew it was really important to bring the service providers together, because they're so integral in the market today that we knew that they were probably going to have to make some changes in order to support the UMBS. So we've engaged with them early, as well, working with them very closely. So closely that they're probably more excited that this is going in this year than we are. But with that, let's go ahead and introduce our panelists. Would you like to start?
Yes. My name is Bill Burns. I'm the Director of Quantitative Research at BondEdge, which is a division of ICE Data Services. I've been with the team there for more than 22 years, and we've been dealing with all the kinds of quant models like prepayment models, term structure models, those types of things, and of course, mortgage-backed security coverage.
Hi, my name is Angela Arora, and I'm a product manager at BlackRock for Aladdin's mortgage trading and operations platform. I'm responsible for setting the product's strategy, vision, and feature definition within Aladdin's investment management platform while delivering relevant tools and technologies to our Aladdin clients. I work in collaboration with my engineering teams and support teams to ensure that Aladdin is being constantly enhanced for any new market trends, as well as regulatory requirements that may be relevant or may impact our clients. In the past 1 year, my focus has been really to come up with a readiness plan for Aladdin to conform to the new mortgage industry best practices.
Morning, my name is Nick Bada. I'm an executive director at FICC. Currently, I manage the MBSD product group. We completed the MBSD Innovation Project about 1.5 years ago. Thankfully, that's been running very smooth. And lately, we've been turning our attention to single security, as well as a couple of other initiatives that we're working with on our membership.
Good morning. I'm Larry Joya. I run MBS. We provide mortgage data to dealers, buy-side, utilities around the street there. We've been doing it for about 21 years. We're a group that's based in Tampa, but to have people around various spots around the country. And just want to thank you very much to have me participate here today. Thanks.
Hello, good morning. I'm Jackie Josephek from Bloomberg. I'm a product manager there and work on the agency MBS sector for pools and CMOs. Glad to be here today.
Hi everyone, good morning. My name is Tom Marecki and I'm with IHS Markit, where I lead our agency mortgage pricing service. Our agency mortgage pricing service is part of our broader securitized products pricing group, where we provide coverage on all global structured finance instruments. I think most people are familiar with IHS Markit. Markit and IHS originally were two separate companies prior to 2016. And in 2016, these two companies merged, producing a much larger company, to which we have access to very unique data sets and analytics. That said, I'm very happy to be here with you this morning to share how we prepared for the Single Security Initiative.
Great. Thank you very much for coming, panelists. We really appreciate it. So one of the things I had mentioned is that your products and services are very critical in the market today. And so I think we all want to understand what kind of changes or enhancements, if any, have you made to those products and services in order to support the pricing trading of this new UMBS? Bill, you want to start?
Sure. Let me say first that as part of a very large organization, being part of ICE Data Services, a lot of the heavy lifting was done by that team. They had to do all the data, handle all the data changes. They have to develop the pricing algorithms and the TBA market linkages and so forth. So we stand on their shoulders, benefiting from a lot of that. So all of that change flows through to BondEdge. Many of those changes were discussed in a company-wide ICE Data Services webcast that we held about a week and a half ago or so. So if you're interested in that from an ICE data perspective, please, you can find details on that webcast that was quite well received by the market on our website. But specifically within BondEdge and the feeds that we also propagate throughout the markets, the main change that we wanted to supply to our clients was, of course, coverage of the pools. Make sure the original or the legacy gold pools are still covered. Make sure the new mirror pools flow through properly. Make sure that any new UMBS issuance is properly reflected. And ideally, we wanted to accomplish that without the clients having to go through a lot of work to accomplish that. So any way that we could get it into our existing system, we were willing to let that flow through and then make some minor modifications later so that if they had to make an upgrade to have a report reflect something properly, they could manage that. So the good news for our clients was they don't have to upgrade to take advantage of this market change. And that we thought that was a very good thing. Now, the next slide is basically the main change that we made to the collateral itself, or reporting on the collateral itself, is on the second bullet point of this slide. What we wanted to do was reflect the fact that there's an adoption, essentially, in the marketplace of the kinds of pools that Fannie has reported on in the past. So the CIs and the CLs and so forth. That's the UMBS marketplace. So anything that comes in as a UMBS will be reflected with that Fannie Mae collateral type. That's what we call it, an FN collateral type. And so that will then flow through the system. It'll still have an issuer that says, if the issuer happens to be Freddie Mac, it'll still say Freddie Mac. But otherwise, the way that we report it in so that you can kind of see the UMBS flavor of a Freddie in this new market is to call it with FN collateral type. Otherwise, there's generally no major analytical changes. So we have not altered our prepayment model at this point to reflect that. If we do see the need to change our prepayment model parameters, we can always do that as we get more data and understanding of this. And we're always obviously open to our clients as to what they have to say on this type of thing. One thing that we do think everyone who has more of a reporting aspect to their role should consider is it's very common for either a mutual fund or an investment manager to have certain guidelines which they're meant to preserve. One of the guidelines may be, I must not invest more than 10% in any given mortgage issuer. And because of changes that are being made on the reporting side, the data side, compliance items like this could become the surprise. So every data vendor, every report user has to kind of think about that separately. Will my mandates look as if they've been violated all of a sudden because I've changed the way that something is reported? There's no fundamental change in my portfolio yet. Now it looks like I have 40% issuance in Fannie Mae. That might be a surprise, and it's the kind of thing that we encourage our users to try to investigate with us ahead of time. And of course, we give that as a sort of public service announcement to all who are interested in this space. That's something that you should be thinking about. And another major aspect of what we have to do in our system, in our BondEdge system, is we do support a number of different index vendors. One of the index vendors that we support is one that's owned by ICE, so the ICE Bank of America Merrill Lynch index family, and including their mortgage index. So we have to work closely with them so that we can reflect the changes that they would like to put in their index to reflect the MBS, the UMBS developments that we've been discussing today. So later, I think one of the panels, maybe the one after this, is to discuss the impacts on the index side. And so you'll be hearing from my colleague on that. But we had to work closely with them to try to understand, what's the best approach so that, the whole breadth and depth of the mortgage market can be captured in the index. And because we're not just a standalone system, and we also represent other index families within our system, we're going to have to work the same way with the other vendors to make sure that when, let's suppose, new generic cohorts that represent the index get created, we understand what those generic cohorts mean, and we can still model it and then produce their version of the index within our platform. So that's one important thing that we've had to do over these last few months. And given that, I will hand on the clicker.
Thank you. So I want to start by saying Aladdin provides a full spectrum of comprehensive investment solutions to help clients with their risk and investment management using a single integrated platform and a single underlying source of data, which is why we understand that this initiative may take a significant amount of work across various business verticals to support an end-to-end TBA lifecycle for uniform mortgage-backed TBA security. For Aladdin's single security solution offering, we have 4 main focus areas representing those broader business verticals, which are first, trading, second, operations, third, reporting, and fourth, analytics. All of these 4 pillars channel a single source of single security data. So let's begin with the most fundamental aspect of our thorough approach, which is the data. Our data model design rationale aims to provide consistent user experience, smooth transition, and uniformity with external systems connectivity. We have created a new UMBS TBA ticker to accommodate for the UMBS TBA. We are consuming EMBS data for mirrors and supers. We are also enhancing new security attributes and adding new ones to accurately classify entire breadth of single security products as per the industry playbook. And these can be 55-day Fannie Mae and Freddie Mac issued UMBS, Freddie mirrors, Fannie and Freddie issued supers, as well as non-TBA eligible 55-day pools. These security attributes can be, but not just limited to, agency, ticker, issuer level information, security description, special indicator for mirrors, and its linkage to the associated 45-day corresponding QSIP, top level concentration percentage for supers, and so on. These attributes will be used throughout the Aladdin investment processes and applications, which kind of dovetails with my previous point of consistent look and feel. It will also aid our clients in sorting, sifting, exploring, or filtering to drill down into specifics of each of the product. Now let's move on to the investment processes, starting with trading. The new UMBS ticker and Fannie and Freddie spec pool ticker will be used to book and enter trades in Aladdin via trade entry. This is again consistent with other market vendors and will provide uniformity with external systems like TradeWeb for connecting via Aladdin systems. We will also support transition roles from pre-go live to post-go live. For example, all Fannie Mae TBA positions will be rolled into UMBS TBA positions, and all Freddie Gold positions can be rolled into UMBS TBA position if the user chooses to. The next is global compliance macros. These will also be updated wherever we have hard-coded agency values for Fannie and Freddie to expand for the new UMBS security exposure. Now we are also actively talking with industry partners as well as Freddie Mac and TradeWeb to think through both of the exchange workflows, which are first direct via Freddie using TradeWeb, and second via selected pre-approved dealer. Both of these workflows can be captured into Aladdin for the exchange execution. However, our recommended approach is really to initiate the exchange, either with the predetermined dealer or with Freddie using TradeWeb once the path has been determined. And these transactions can then be bulk loaded into Aladdin with the corresponding exchange IDs once the exchange has been executed. We will also facilitate capturing of float cash compensation as a miscellaneous cash item in Aladdin if you choose the Freddie Mac path. And we will also support appropriate notifications to be sent out to custodians or any interested parties. The next is operations. The primary change in operations is really the updated TBA good delivery guidelines for allocations of UMBS, supers, and mirror pools into the UMBS TBA product. Inbound EPN will be enhanced to leverage this new TBA allocation eligibility criteria for automated allocation processing. This allocation criteria will also be used throughout our tool called Mortgage Browser for allocation processes, whether it is manual, batch, or EPN. There is no as such FICC impact, for example, trade netting, pool netting, reprice, and we will continue to support UMBS TBA for other operational processes like trade assignments and creating round-robin opportunities. The next is our risk and analytics game plan. First and foremost on our radar is the full analytics support of supers and mirrors so that they can be run via our risk reporting analytics tool. Cash flow generation for 55-day QSIPs will also be enhanced to be able to run on the model for 45-day corresponding QSIPs. Second is the BRS risk reporting green package solutions, which will be updated to reflect the new agency breakdown. For example, Fannie Mae bucket will lump together the new Fannie Mae issuances, and Freddie bucket will include the 55-day UMBS and mirrors in addition to the current Freddie QSIPs. Other potential enhancements may include updated risk models, par coupon calculations, pay-up calculations, seamless transition of the agency MBS factors, relative value analytics, and so on. And lastly, to prepare for the changes in index, we are also splitting Freddie cohorts into 55-day cohort, which will comprise 55-day UMBS and mirrors, and Fannie and 45-day cohort, which will contain 45-day current Freddie QSIPs. Before I conclude, I want to quickly cover another low-hanging fruit, which is Aladdin's transaction reporting solution and Aladdin data interfaces, which is widely used across clients for their downstream applications purposes. And these will be enhanced to include the new security data attributes and to reflect the updated security attributes to account for the new UMBS positions.
So when we sat down, I guess it's got to be close to 4 years ago with the FHFA, when they first came in to talk to us at DTCC about the single security, they talked at a very high level about what the agencies were thinking, and that for the most part it was going to mirror a Fannie Mae. And we looked at that as a bonus for the FICC. Most of our systems are driven off of the O1F, the CL, the CI, et cetera. So as we got into the project and started tearing it apart, we kept coming back to the simple premise that we actually didn't have to do anything from a technology standpoint, which was tremendous relief to us. Every 3 or 4 months, we would revisit it, and I'd wake up in the middle of the night and I'd speak to the technology guys the next morning, and they'd be like, no, we checked this, we checked that, and all throughout our process, there were really no changes that we needed to make. From our perspective, though, really our concerns are twofold. One is our membership. We have to make sure that the changes that they're making will still map appropriately to our system. And then the other piece is actually from a legal standpoint. It's important due to our rules and our rule book that we have to file any changes, and UMBS actually comes to us as a new product offering. So that from that perspective, we would need to file rule filing with the SEC. So taking it one at a time, really looking at it from a testing perspective, We break up our membership into two categories. There's the clearing members, and then those that are the EPN-only guys. So we opened up our testing back in November, and as of the end of last week, from a clearing perspective, our clearing membership, about 70% of the members have completed testing with us, so we still have a ways to go. We sent out an important notice on Friday, I believe it was, where we have said that the clearing members have only until the end of March to get that completed. So those members that are clearing members at FICC have only a few more weeks to come in and test with us. The test script that we've set up is rather simple. Could be completed in probably a little over an hour. It's really about submitting some trades, submitting some EPN messages to us. Really, it's more about making sure that any changes that you made are not going to cause any conflict with us or the rest of the membership. For the EPN-only firms, we are only about 40 to 42% complete, so they are running a little bit behind. Some of these firms won't do as many mortgage-backed trades on a monthly basis. So we've really been working with our relationship managers to contact them, work with them, make sure that they understand what they need to do to complete testing. They have a little bit more time though, because we're looking at that June 3rd date. Really not going to settle until the June settlement cycle, and that's really when we'll see the EPN activity kick off. So we're giving those EPN-only members until May 31st to do their testing. So again, it's only a little over 40%, so there is a significant amount of firms that still need to test for us. We encourage you to reach out to our product team, the implementation team. The information was sent out on that important notice on Friday. From a legal aspect, so I have very strict language that I was given by our attorneys. We have submitted our draft rule filing, and we are awaiting feedback from the SEC. We hope to file for immediate effectiveness soon. Basically, what that means is that once we do get that feedback, we'll make any changes that the regulators request. And then when we do submit back into the SEC, immediate effectiveness is what it sounds like. At that point in time, it is approved, and that firms can submit trades to us, and we're good to go from our rules perspective.
How do I do this? Oh, the green one. That switch? Am I doing this wrong?
Is it the green button? Yeah.
Did I go backwards? Oh, there we go. Oh, there was an extra one.
Okay.
When we first heard about this initiative from Fannie Mae and Freddie Mac, they spent time going through it with us, and we just kind of thought about, got our group together at EMBS and said, well, what are we doing? We're providing data that comes from Fannie Mae and Freddie Mac in formats that they provide, in older formats that they had provided in years back, and in our database format and via our screens. And so when we looked at that, we said, well, how can we support this and have our clients and partnering firms that host our data set have the least number of changes available and yet still receive all of the data. And so we've gone through that. Things have gone very well. And just go through a few items with it here. The changes we've made, we've added the mirror securities. You can see the count through a few weeks ago there. We're supporting Fannie Mae's move to the aligned format, so we've received their test files, and we're converting those back. So we're providing the files in the new aligned formats, and we're converting them back to older formats. So for firms that need a little extra time or prefer to stay on older formats. So some of the things we're doing there. We've also had to make some changes to our EMBS database to support UMBS and supers, and we'll kind of go through that in the commingled supers. Go through that in a few slides here. Changes we've made so far, we populated the mirrors. The cumulative exchange table is live, showing the mapping between the golds and the mirrors. Still showing 0 for the amount exchange, and that'll begin. And then the detailed exchange tables will be live in June but are testable now. The data for the exchange of a mirror is also reflected in our collateral table, and so the data is in our collateral tables for them. As I said before, we're testing and providing the Fannie aligned files. We have a new table that maps TBA products, the UMBS products, to the pool level products. They're available for clients to download. The UMBS aggregations, we're creating an aggregation that will have the Fannie Mae pools as a part of it, the Freddie mirror exchanged portion of the Freddie mirror pools, and the Freddie pools from loans. So that'll be an exchange. That'll be a aggregation of the three of those. We're also summarizing the available supply of UMBS, and we modified our TBA to pool association so that clients can understand within the database how which pools are available for which TBAs. Also created a super summary table. It's for the commingled supers and really for any super. But it's in that table and reflected on our screens will be the percent Fannie and percent Freddie for that super, both as a percentage and the actual balance. And as has been mentioned a couple times through the day here, we're doing that from the exploded level of the collateral, so the lowest level of the collateral. We'll also be able to see it. These are the files that we're converting back to. No need to go through them. It's the daily and monthly files that are existing now. So we're providing the data in the new aligned formats for Fannie Mae and in these current formats for clients that need a little extra time to switch over. There's our TBA to pool mapping in the right-hand column. You can see the UMBS mappings of the 10, 15, 20, and 30 year down to the pool level products. There's an example of the UMBS aggregations. As I was saying before, these will have the Fannie Mae pools, the Freddie mirror exchange pools, and the Freddie pools from loans, which will begin to be issued in June. If you bring up on our main pool page a commingled super, you're going to see these, this area that's circled in red will sort of jump up, and it shows the percentage Fannie, percentage Freddie, both as a percentage and a balance. So that's for a commingled super on our regular main pool page. We're also doing an exchange aggregation page, which shows by products down the left side and coupons across the top. In each cell, you see the amount that's has been exchanged in the bolded text, and then the amount that's available to be exchanged in the text to the right of it there. If you click on one of those products on the left side, you jump to a detail page where it shows the, and it's getting a little difficult to see, it's showing coupons down the left side there and across the top. It shows the components of the amount that's available to be exchanged, both directly, the amount that would be exchanged within Giants, et cetera. So that's, you can see the detail of those as you go across. We have a set of special portfolios, like we have the Fed portfolio and things like that on the MBS, where you can see that and see various groupings of pools that have been interest to clients over time. So we're adding a new one here with the commingled supers. This will be a list of them that a client can just click on and see what the issuance has been in them. We also have a client query tool that separately will show supers either for Fannie or Freddie or the commingled ones by month. I think the next page then shows listing of the supers that have come out that month. You can see the one at the top that's circled in red there has a percentage Fannie and a percentage Freddie. And then other ones are just zero because they're just, they only have Fannie or Freddie. All test data here, but that's how they can be seen. Also on our, if you keep a portfolio on EMBS, either a bid list or for clients keeping their positions on EMBS, they can quickly look at a portfolio level and see what their percentage Fannie and Freddie is for that portfolio, and then see the details of that, see pool by pool within that portfolio, what the percentage Fannie and Freddie are and what the balances are. This is our homepage here, and we're just showing the part circled in red on our homepage shows a frequently asked questions link, and if you click on that frequently asked questions link, you go to a page that's got information about the project, and particularly at the top, there's a link to this presentation. That's pretty much it. I really want to thank everyone at Fannie and Freddie who's helped us a lot with this, and help our clients, thank our clients and our partnering firms who have helped us figure out exactly what's needed to be done and what's most helpful. Switch it over to Jackie.
Thank you, Barry. Hello, folks. Wanted to just share a few of our challenges with all of you, and as you know, several panel members have suggested, it of course comes down to the pools, the generics, and in our case, TBAs as well. So we've been working on them for several months, obviously starting with pretty much last summer when pools needed to be nailed down in respect to allowing you to see those mirrors on our description pages and on our collateral pages, and ultimately within our analytics, so you could run OAS and use our prepayment model, which we call the BAM model. Yield tables, all those kinds of things, up and running or have been for months, and that puts us in a great position to be ready for June when new issue Freddie pools are issued as well, and the supers. So again, we'll be ready for those, just like again our other panel members have mentioned. One of the other challenges we have too, mentioning these three products, is that we have a lot of other ancillary businesses at Bloomberg that leverage those. So whether it be our AIM portfolio management tool or our enterprise solution tool where folks are taking in bulk files at night, or our FIT electronic trading team that needs TBAs in respect to some descriptive changes to leverage into next week's launch for TBA trading. We're working not only with our three products, but ensuring that all of our downstream teams have the support they need. So that's really ongoing work that continues. In respect to generics, we spoke about those, or the other panel members have been speaking about those a lot. We too will be continuing to keep our legacy generics. There'll be some new migration of 55-day Freddie pools into our existing Fannie generics. With that, though, we'll be creating some new generics as well to facilitate the need for our index team and other clients that need some in-depth analysis. So we'll be announcing what those nomenclature is for those generics over the next few weeks for you. TBAs, as we just mentioned. We have an electronic trading screen, which is FIT, or BBTM if you have a Bloomberg and you can run that screen. Obviously, we need to be up and running next week for you in respect to the June TBAs that potentially will be kicking in. So we have some work that's being done and readied up and testing going on so that we're ready to go. With that, we know that dealers will also be reporting some of those trades as trace eligible. We'll be receiving reports from FINRA, as we always have for you, and displaying them on our screens to ensure that you're aware of any of the UMBS TBA trades that are going on. So we'll be finishing up some of that work to be ready for TBA trading to hit next week. Also, in respect to whether you're dealing with pools or generics or TBAs, not only do folks need descriptive information on our screens or to be able to run a yield table or to be able to run the BAM model on OAS1 application, folks want single path analysis or multi-path analysis through other means on Bloomberg. So we've been working to ensure that if you need a programmatic way to capture that analytical data over Bloomberg for any of those instruments I just mentioned, CMP is our core mortgage premium tool, and that's been readied up to support generics and TBAs and, as it relates to UMBS, and is ready to go for you as well. So if you wanted to run analysis for a list of pools or a portfolio of pools, and that's really at the heart of when you're doing more work outside of looking at the terminal for single security analysis, when you have a list or portfolio of securities and you need more robust power behind it, that is something to take a look at or at least approach us on so we can make sure you're comfortable with using or leveraging Bloomberg for list or portfolio analysis in respect to rigorous analysis for any of your UMBS needs. As another example of that portfolio support, Bloomberg has the AIM tool for portfolio managers, more of a formal portfolio tool. We've been working with the AIM team to ensure that when it comes to exchanging, that they have several different workflows in place for folks. As it relates to working with TradeWeb, we've been working with them to accommodate and ensure that some of those workflows include getting your exchanges done and getting feedback from TradeWeb for your positions. So we have some documentation on that as well. So feel free to touch base with us on that if you're one of our AIM folks. Never ending, of course, as we keep going down the laundry list of folks that we'll be working with closely. We have a Bloomberg valuation team that provides pricing for securities across the mortgage spectrum. Obviously, they'll be working with us closely. We are making changes for them to ensure that they're ready to go. We've been looking at the compensation files that Freddie's been putting out there to kind of capture those compensation values to allow not only for users of the terminal to see those values, but also for our valuation team to grab those values and incorporate it into their pricing so that they can have 45-day mirror pricing for you, as well as other pricing related to UMBS. And then, of course, that valuation flows into some of the needs that our index team has as well, that Bloomberg Barclays Index support. Again, we mentioned we'll be working on some generic changes for them, some new generics, as well as, again, ensuring that they're getting some of this pricing from the BVAL team, and that's supported for them. So Nick Genren from the Bloomberg team will be speaking about index support, I think, at our next session here. So those are some of the topics I wanted to mention. I know we'll have time for questions in a little bit, but for now, I am going to pass it on to Market.
Thank you. Hi again, everyone. My name is Tom Marecki, and I just want to speak with you about IHS Markit's preparations in advance for this pretty substantial change that will be hitting the marketplace. And the way that IHS Markit fits into the launch of UMBS and the whole single security initiative is as an independent pricing provider. So we provide pricing on all agency mortgage products, pass-throughs, TBA, CMOs, and so forth. And I think it's probably best to just go through a very brief timeline of our engagement with the market community, and to also describe the internal updates and changes that we've made to our systems and pricing models to really get ready for June. So throughout the course of 2018, this was, of course, a very busy year for us, for everyone in this room, and everyone beyond as well. That goes without saying. So as a firm, we made it a priority to engage with the GSEs, with our clients, and with various market participants in conversations, in meetings, and also crucially in the tabletop sessions that both Fannie and Freddie have hosted throughout the course of last year. We found those engagements and those conversations and the knowledge sharing to be very beneficial to firm up our understanding of the timelines for the go live date, and also to really understand the technical changes that would be hitting the market in very short order now. So in addition to those widespread conversations, of course, internally, we've established and executed upon a project plan where we've allocated budget, resources, analyst and development time to address the launch of UMBS in a number of ways. So the first way is through the reference data piece. So we work with our data partners and providers to receive the test files, to understand the different file formats and the feeds that have been made available. And throughout the course of last year, as test files were made available to the community, we worked with our providers and our development teams to consume that information and to critically categorize securities in the most appropriate way. So for the 70,000 plus mirror securities, for example, we want to make sure that our system could identify those securities, segregate them out into the appropriate cohorts, and then price them in line with our expectations and where we think the market will be trading. On top of that, from a pricing perspective, it is our expectation at this point in time to price the 55-day mirror securities in line with the existing appropriate Fannie cohorts. So we want to make our system flexible enough such that we can price securities in line with where with our expectations. So those mirror securities, for those that are TBA plus pay up, should be marked to what will be the UMBS TBA come June. However, because the market's not live yet, there are, of course, many unknown situations that may crop up. So we want to maintain flexibility within our pricing system to price any discrete cohorts that may be behaving or trading differently in the marketplace. So being able to consume the information as we know it'll appear for the new file formats was key, but also having flexibility to respond to changes in the market and potentially unforeseen changes. That was certainly a focus of our development efforts as well. In terms of data delivery, nothing's really going to change in terms of how our clients receive our valuations. So our SOTP feed is a popular way through which clients consume our information, through our portfolio evaluation service as well. And increasingly popular is our web-based front end, which we call Price Viewer. And on Price Viewer, there's a screenshot there of our test environment of how things currently appear. We're able to, again, price all of the 70,000 mirror securities, of course, legacy gold securities as well. This sort of UI allows for additional data points and interactions that clients can engage in that are a bit more enriched than if you were just to receive a data feed. So the linkage between mirrors and golds, for example, users can toggle between observing our pricing for those two sets of securities, also observing daily exchange information, what percentage of the face has been converted from gold to mirror. That will be displayed as well. So this is something that we want to make available to our clients in Q2, certainly before the go live date in June. And it's something that we are confident and prepared to offer out to our clients and to trial users. And that pretty much wraps up our updates.
All right, great. Thank you, everybody. That was a lot of information, wide range of enhancements. Nick, it sounds like you got pretty lucky with not having to make any significant changes. But Nick, you did allude to something that is kind of on our minds. You know, collectively, all of you have a ton of clients. So as part of these changes, how have you engaged your customers and what do you feel is their readiness? And Tom, why don't we just keep it with you?
Sure. So certainly over the course of the later part of 2018, clients have reached out to us and asking us, okay, how have you prepared for the switch over to UMBS? And we basically provided this very same update saying that we've run all the test files, we've tested our models, run different scenarios, and we feel confident in our ability to provide pricing on day one as to avoid any kind of day one disruptions, which appears to be a chief concern amongst most of our clients. Also, a few weeks ago, we disseminated a widespread email notification to all of our clients, just letting them know that we've done our diligence and done our work to provide pricing in an unmitigated, undisrupted fashion. And we've also utilized our social media channels. So we've posted on LinkedIn and so forth to really alert the broader community of those who may not necessarily be our clients, but to just the broader market community, we want everyone to be aware of our preparedness and our updates in this space.
Jackie?
At Bloomberg, how many folks have Bloombergs that have used our help desk before? Help? Anybody? We're lucky enough to have a help desk. So any line of questioning whatsoever, help on your Bloomberg terminal is a great way to start the conversation. Those conversations or questions actually quickly funnel down to our teams. So feel free to start the conversation that way. A lot of other questions funnel in through our specialist team. We have specialists that are engaged or who have specialty in mortgage backgrounds, and so they go out actively to our trading communities and are engaged in that conversation. That said, early on, I think through a lot of the roundtables and things that we had with Freddie and Fannie hosting these events over time, we've had a lot of hosts approach us, and I think the other vendors too, in lieu of being concerned about enterprise-wide use of the data. How is data changing? We receive files from Bloomberg and other vendors every night. What things are changing so that we can get ready. So we've had a lot of ongoing conversations with folks from that venue who are very aggressive in ensuring that they have the answers they need. So we've tried to ensure our enterprise team has always had the practice of let's get the information out there that clients, that prepares clients for a change, and then we'll make the change several weeks later. So in fact, we just released, some TBA descriptive fields had to change for the June, July, August, and thereafter TBAs. We made that change last Monday because we wanted to give folks some time, yet we needed to be ready for TBAs for next week, so we're trying to kind of time things well and ensure that everybody's ready and ready to go on those kinds of things. So enterprise clients have been pretty active in reaching out to us. Aside from these types of forums as well, we've tried to be present, make sure we're out there at SFIG and those kinds of events as well. We had an event at Bloomberg on January 30th. You could also go back and listen to that if anybody's interested in. We did have a UMBS panel at the time, along with some of these other things that we were describing before, whether it be CMP or the Bloomberg Prepayment Model, BAM, that you can listen to regarding some of those topics. And lastly, we've had a lot of clients that reach out and say, will you come down for the day to at least speak with some of our traders, or we're having other clients here at our firm. Can you guys come down and help us out? And we're absolutely, completely willing to obviously go out and do some support work and help in any way. So keep that in mind. And that's it for Bloomberg.
At EMBS, we start with taking a look at what the changes are, and then we put together data notices that go out to clients there. But that's really just the start of the process. And the start of the process kind of says, okay, here are the things that are changing, here are the changes we think we're going to make. And it really just starts the process, and then clients kind of come back. They come back by email, they suggest phone calls. I've had visits with clients there. And what we really hear from them is, here's what you're going to do. Here's the thing that we really need to help our business. And then we kind of modify what we were originally going to do and kind of better able to tailor it to what clients are looking for. So while it starts with our data notices there, the regular conversations that we have with clients, both via email, via phone, and via visits, have worked out very well and have really helped us figure out what do we need to do to support this in the market and how we're going to do this going forward. It's worked out very well.
Yeah, I think at FICC we've used a number of different resources to keep the message out there. Our relationship managers are really great, constantly speaking with their clients. We use important notices. We've used webinars with our clients as well to keep them informed of important things such as single security. I go back to some of the conversations that we had with Fannie Mae and Freddie Mac as this was really kicking off. And they'd come to us because we were involved in a couple of industry initiatives, and really the question was how do you keep the message out there? And really my response was you just have to keep pushing it out there, and I think they've done a good job with that. We at FICC definitely saw an uptick after the last conference. It was more of an awareness about what was happening, right? I think before that, people realized that it was out there and that there were definitely some thoughts that this could happen. But when we had the last conference, it became more real for a lot of people. And I think, as we've headed into the end of last year and kicked off the new year this year, and with the advent of today's conference, we're in the home stretch, right? And so people are really more focused on it. And I think, we all know that it's true. I think it's kind of human nature when it comes to this sort of thing, is you want to kind of wait till the last minute and you don't necessarily want to be first. But I think that we've all tried to keep it in the forefront as best we can. And I think more importantly, our clients are now getting it, and they understand that June's going to be here sooner rather than later.
So in past 1 year, BlackRock market practitioners and Aladdin team members have been actively engaged with both GSEs and the broader industry to ensure that Aladdin and clients are really prepared for this movement initiative. And our continuous engagement loop with Freddie Mac and Fannie Mae, coupled with the feedback driven by Aladdin client community, which comprises of 80+ industry-leading organizations, have helped us to brainstorm a comprehensive solution and building out this new functionality to assist our Aladdin clients to meet this initiative. Members of BlackRock and Aladdin team have also participated in the tabletop exercises, which was conducted by Freddie Mac throughout the latter half of the year. And this was done really to identify and address any potential issues which may interrupt the UMBS transaction workflow, and to validate the overall market readiness with other market investors as well as other vendors. In order to ensure that our outreach and communication is really relevant to each of our clients, we captured in-scope products and associated workflows for every client. This helped us to kick off our targeted customer outreach program for any Aladdin platform impacts. And these customer categories included EPN-only clients, Aladdin risk clients, or innovation clients, and so on. Our primary focus of engagement has really been to educate clients on functional proposed changes in Aladdin to meet this initiative. And how we have done that is by hosting a couple of Aladdin-wide client forums. First one was conducted last year to highlight the Aladdin proposed changes and our data model. And more recently, we hosted another one of the forum just 2 weeks back, which I hope some of you were dialed into. And this forum, we communicated out to our clients our readiness plan and our deployment timelines. Other than these forums, we have also published documentation and are still actually publishing a documentation relevant to each of the impacted business workflows. And we have also provided MBS data samples and entire Aladdin-supported single security product list to all our clients. This also comprised of trades, securities, positions extract, which our clients have been continuously using to assess their downstream impacts. And one last thing, we understand that this one-size-fits-all model does not necessarily work, since clients can have individual interpretations and unique workflows, which is why we have also engaged with our clients on a one-off basis to understand their customized, tailored needs and to analyze whether we can potentially incorporate their bespoke workflows or requests into our scalable platform.
So on the bondage side, as I'm sure in many of our respective other guests here, we have clients across the spectrum, from the back, middle, and front office. And so everyone might be coming at the problem from a slightly different place. Many of the questions we get don't come from the people most knowledgeable because they already have their answers, right? So the questions are coming from, let's say back office that wants to understand what does it mean to them. And in particular, it could be something as simple as, I don't understand the exchange process. Does it happen automatically? Do I have to do something? Is Freddie going to make me go through a broker? Can I do it through Freddie itself? And guess what? Because I'm here at this conference today, I already know the answer to that. I didn't know before I got here. So, and what Anshul was saying, I believe, is that we are educators. They want us to help them get comfortable with the topic. It isn't so much that the mortgage universe has been revolutionized. There is an element of revolution in the sense that there's a major initiative, but because of the way that it was done, it should make clients feel more at ease that they understand what the CL prefix is and they understand what CI is. They're going to get that very quickly. So they know that there's an initiative to tighten the standards so that there's going to be less deviation between a Fannie and a Freddie pool. So with those things said, what our clients are typically asking us is, okay, to just give us the basic bare bones, because they haven't thought about it a lot. I would say a lot of clients are in a place where they were a year ago. They're not thinking about it actively yet. And so as these days click on, we need to keep that mantra going so that they get more and more educated so that there are no surprises as reporting starts coming due. Now, one of the major things that I still consider, in my opinion, to be sort of a undecided area where it's hard for me to give clients some guidance is the whole concept of the commingling. And so that session on commingling was very important to me because it helps me understand more of the processes, but it doesn't quite help me understand what's the market going to do yet. How does the market want to see it so going forward, especially in the short term? Why does it matter? Well, many of our clients are benchmarked. The benchmark's going to take a position, one way or the other. Are you going to have commingling or you're not going to have commingling? We've been through a time where, for the last 30 plus years, we've had a Freddie Gold cohort. We're used to looking at Fannie and Freddie separately, and now all of a sudden you're telling me that might go away. That's where I get a little uncomfortable if I'm the client. I'm saying, what's going to happen? And so this whole concept of how much commingling should there be, at what rate, is to me the biggest open spot that as much as we can help our clients understand, it could be also different perspectives from different clients. One size doesn't fit all, as I heard earlier.
Well, I'm glad we got the feedback that one of the panels already has been useful, so that's good to hear. It sounds like there's a lot of good communication going on with your customers, so that's great news, and it seems like you think they're semi-comfortable with moving forward with the changes, but keeping the communication lines open, so that's great. One last question. Many of you had touched on it during your updates, but I think if we could just get a more succinct answer of what everybody's kind of thinking about is your implementation timeline. So when are you going to implement, and any risks or concerns at this point? Go ahead.
Okay. So our implementation timeline is heavily dependent on the whole intercontinental exchange timeline. And as I said, those timelines are all available through our website if you wish to go see the Intercontinental Exchange website on our webcast. For example, we're going to start pricing the mirror pools actively every day. I believe it's starting March 7th or March 9th. After that process, begins, we'll start having more and more of that within our product. But from our timeline point of view, we're already UMBS capable. So we don't have a specific release date that we have to meet in order to make this happen. One reason that is because of the thinking that went through this. Okay, this process was telegraphed to the market a long time ago so that we could be prepared. So, we did have to do changes in the way that we offer generic mortgages so that generic mortgages wouldn't be so technology-based, so that when it came time for this UMBS, it would just flow through. So now all we have to do is just turn the switch on and it'll start flowing through because the process was telegraphed to us. So that was a very helpful thing. So we have a couple of caveats in our system that we'd like to make a little richer so that UMBS can be better reflected, but our clients don't have to take that. And so we'll have a follow-up release for our clients sometime in May before the June deadline, and we'll also have a private BondEdge webcast relating to the whole UMBS market sometime in April 24th, I believe.
So our solution comprises of a bunch of product enhancements across a number of functional areas with the goal of supporting each of the key business processes that may be impacted by this initiative. This means that we have a bunch of deployments slated to provide this holistic package. But the bottom line really is that development will be completed in time and well ahead of each of the single security milestone and the UMBS forward trading timeline for a successful go live. So let's cover what we have delivered up till now. The first piece is the deployment of the UMBS trading ticker. This enhancement is already available to our Aladdin clients. So this means that clients can start booking UMBS forward trades for June and beyond settlements using Aladdin's trade entry and see their positions flow through Aladdin's dashboard, and so on. Mirror pools, which were made available sometime in last year, are also loaded into Aladdin, which means that a client can look up using a mirror pool QSIP in Aladdin's security master. All backend platform changes to incorporate the new data model have also been released out to all clients. And Aladdin data interfaces to include the new security data attributes is also already available in clients' UAT or test environment, which clients have already been consuming. And one of the last quick wins which I want to mention is that Aladdin team has successfully conducted conformance testing for UMBS TBA capabilities with DTCC as a service bureau on behalf of all our clients for EPN and RATM. So this means that Aladdin platform has already been signed off and certified by DTCC. So this covers where we are as of today. What's our go-forward plan? We have a bunch of deployments, again, pipelined in the next couple of months. For example, all data points for supers and new Fannie Mae issuances will be loaded into Aladdin as soon as they get, the data feeds are made available by the third-party providers. Second important deployment will be of our inventory management tool called Mortgage Browser sometime in the month of March, which will cover all the operational enhancements and also include viewing of the TBA, UMBS, and pool positions, enforcing of the TBA allocation criteria, and support of transition roles. This deployment will also cover Aladdin's transaction reporting solution called Aladdin View. And we also have a bunch of analytics milestones which are slated to go out by the end of March. For example, full analytics support of mirrors and supers, pool pricing enhancements, relative value enhancements, and risk models, and so on. And the last piece in our deployment will be to support the exchange execution. As I mentioned earlier, both of the workflows can be captured in Aladdin, but to get a sense of timeline, all the enhancements related to the Swift messaging to incorporate the exchange ID and the loaded enhancements to capture the float compensation as a cash item in Aladdin and trade template to capture the trade transactions in Aladdin. These are all slated out to go in sometime in the month of April, again, well ahead of the UMBS exchange May 7th open window. So that's pretty much what we have from Aladdin team, and we are pretty confident that we are very much in line and prepared for this initiative.
From an FICC perspective, really it comes down to what I mentioned earlier as far as implementation goes. It's all about getting the rule filing in and approved, and then the other piece is working with our clients to test to make sure that there are no issues really on their side. Though I do want to touch on two, I guess for lack of a better term, myths that have come up very recently. And Mike Hutchins actually touched on kind of both of these on the earlier panel. The first one is there seems to be a rumor out there that FICC will no longer accept Freddie Mac Gold TBAs effective June 3rd. That is not true. As long as we can continue to get pricing and be able to risk manage the securities, our members are welcome on the clearing side to submit TBAs, specified pools, whatever type of Freddie Mac Gold transactions that they intend to do. You know, we envision probably over time, we just, as mentioned earlier, we don't know how long that timeline is going to last. Eventually there will not be a market, I would think, or at least from our perspective, for netting, we don't see that many trades coming in, but we will be accepting those transactions through June and into the foreseeable future. The other thing that was brought up again recently by some clients that called us was this concept of if you did a Fannie Mae trade today and then you did a UMBS trade on June 5th, that FICC would be somehow segregating those types of transactions when it came to our TBA net. For us, once the June cycle is activated, when we run a TBA net for whether it's Class A or B, regardless of what you put in, you're going to get one, transaction back out of that net, either a buy or a sell. We're not going to differentiate between, Fannie Mae or UMBS. So if you did that trade today, as a Fannie Mae, and you net out as a net buyer or a net seller, you do have the, risk or the thought that you could possibly get a UMBS transaction as part of that. And again, for us, we're agnostic to it, but we think, that's the way this process is going to run. Though, Mike did mention the four-letter word that I think nobody wants to really talk about is STIP, right? If for some reason you do need a Fannie Mae security come June, you would have to do that as a STIP trade. But I think that's all of our fear, that we don't want to see that happen, right? I think, especially over the last couple of years on the dealer side, our members have seen a tremendous amount of operational efficiency really kick in over the last couple of years. And I think we want to be able to continue to see those efficiencies in the market. I think if somehow we start moving into a STIP market, we would lose a lot of the benefits we've gained in the last couple of years.
Thanks. At EMBS, we're live with portions of the support for it. Other portions are live and waiting for the data. We are proceeding along to begin later in March. We're going to have a parallel period, and that's really sort of the key period where clients will then be able to pick up data in their formats and pick it up and be testing with it through June. They've been testing already, but just on some initial files that we've received. So the parallel period that will begin later this month will then continue through June for both the daily and the monthly updates. And then the go-lives, the switchovers are what would that be? Monday, May 20th for Freddie Mac. They switch over to CSS that day. I believe I'm correct on that. And then Monday, June 3rd, Fannie Mae switches over onto CSS. And then we'll begin to see the data coming through. And so far, we've been getting good reports back from our clients. The ones that are testing very closely there are picking out certain things that are going on with the data there, and those things are all been addressed and are being worked on, and so feel very good about it.
We too have been dealing with those file formats, getting ready for support of those as well. So we're with you, Larry.
Yeah.
We also, as mentioned before, will be getting ready for TBAs for next week, ensuring that our TBA electronic trading screen is ready to go. In addition, in respect to March stuff, we also will be making some more fine-tuned changes to the mirror pools and to existing Fannie Mae pools in respect to some of the fields that we describe things as. So we'll be putting out another file to say here are a few more changes that we'll be making, which we'll probably address making those by the end of March. So those are a couple of other things that we'll be getting ready to do. And of course, our BVAL team wants to price those mirrors, so we're pulling in those compensation values, as I mentioned before. We're working through that file. And then we'll be looking again at the other files in respect to exchange activity. We know folks want to see the exchange activity on our description pages, and for Bloomberg to kind of tally that data as well. And that information obviously has to also flow up into our generic cohorting. So all of that's being addressed and planned for, so we're all ready to go before June 3rd. And again, a lot of what we're doing now is ensuring that our downstream teams that are pulling this data into their applications are not hitting up on any obstacles. So we're doing a lot of beta testing with those folks to ensure we are, again, ready to go on all fronts across all the different folks within Bloomberg that rely on our data. With us today, and I may not have a chance to mention it, so I'll quickly mention in case you have some great questions for us. Our team is out in the vendor area with the Bloomberg terminal with some of our specialists there. And actually I have two of our folks from R&D here today too. So they're really good to hit questions up with for answers that you might be looking for. So let us know what questions you might have.
So in terms of IHS Markit's timeline, we feel prepared and ready to go for the May exchange eligibility date, and also for, of course, the UMBS June go live date as well. Again, we've been consuming and processing all of the test files and test data, and also pricing in our test environment all 70,000 plus mirror securities as part of our daily pricing runs with our production service as well. So in terms of pure systems and data delivery standpoint and continuity standpoint, we can basically turn that on at any time and deliver continuous service to our clients through that way. In terms of our concerns or potential risks that may be on the horizon, I would say the chief concern for us is as a mark-to-market provider, pricing a market that doesn't yet exist is challenging in and of itself. The evaluations that we're running for the mirror universe, of course, are highly theoretical at this point in time. But once the market does come into existence, once it is out there and active in the world, I think a challenge there is to be able to observe liquidity, work with our clients, and also price the securities in line with where they're actually trading in the marketplace. So that I would say is kind of a chief concern. It's something that, given the updates to our systems and the conversations that we've had, that we feel equipped to be able to handle and respond to in a quick and timely fashion.
Great, thank you. I know we're standing in the way of lunch, but I do want to open up any questions to the audience. If you have a question, please raise your hand. No questions? All right, in that case, I just want to say thank you to the panelists for coming and sharing your information. We really appreciate it. Thank you.